Is the gold rush of 2009 over, or is this the buying opportunity some of you have been looking for?
You know, if you see some steam, it's because of this guy on our right who's just been steaming and fuming and waiting to get his comments out about whether gold is actually dying. Andrew Schiff is one of our favorite gold bugs. He is from investment consultant. He's an investment consultant in Euro Pacific Capital. And Andrew, is this the end of the gold rise? And if not, why not?
Okay, well, first of all, I just want to address the subject a little bit more broadly. And as many of you know, I'm also, in addition to being an investment consultant, I also run the communications for Euro Pacific Capital. I've been doing that for years. So I talk to reporters on a daily basis. Right. And I've talked to quite a few print reporters today about the jobs number. And the jobs number has to do with the movement in gold today, so we want to get to that first. And everyone's saying this is a great report, this is a great report, and I've called them up with our comments, which are, hey, let's look at this a little bit more deeply. What happened with this jobs number? First of all, the labor force actually went down, which moved the unemployment rate down because less people are actually looking for work. We still lost 11,000 jobs after all the stimulus money we spent. Plus, if you look at the actual numbers, we added jobs in education, we added jobs in healthcare,
Andrew, you got to get to gold.
In manufacturing.
You got to get to gold.
The point is this. Everyone says, great, the economy is doing better, therefore the Fed's going to get back in earlier and raise rates, and that's going to strengthen the dollar, and that's going to eliminate the need to buy gold. I think all those suppositions are pretty much wrong. So if you look at the jobs number, it doesn't actually mean the Fed's going to raise, because I don't think the Fed's going to raise anytime soon. So if you look at the jobs report with a little bit more, take it a little more grain of salt, you can see that it doesn't really cause a big reason for gold to sell off.
But the trajectory, Andrew, is one that is getting closer and closer to at least break even versus even possible job growth. And I say this because go back to a year ago, January, Andrew, we were losing close to 700,000 jobs. So yes, of course we lost 11,000 jobs. And yes, the labor force has shrunk because people are giving up. But call a spade here. This number has gotten a lot better. It's less worse, certainly, than it was a year ago.
The jobs that are being created, or the vast majority, are being created because of the stimulus money, because of government spending and direct stimulus spending.
So why does every gold trader today sell off gold of what we've seen?
Well, I mean, look, you've had a great run in gold, and the biggest bear moves always occur in a bullish rally. So you get a lot of people who are not convinced. You get a lot of people who have jumped onto a frothy market, and it's been going up very fast. When it starts to look bad, everyone jumps out. You got a wall of worry, and in a bull market, the biggest moves on the upside are up moves, and the bear the other way.
Are you looking for technical levels? Is there some price point at which you would say, okay, now I'm going to buy massively into gold?
We're not looking at gold as technically driven. We're looking at it fundamentally driven. So we're buying, and we think it's going up to 2,000, no problem in this particular move. Doesn't mean there's going to be big pullbacks like today.
Phil Flynn, you're talking to traders there in Chicago, talking to commodities and gold traders every step of the way. If indeed it looks like this number is continuing to get less worse or even at some point better in the next 6 months, does this mean the end? Do they believe that that was it for gold, or are there other fundamentals that continue to make this an attractive investment?
There are other fundamentals, and basically they are the threat of inflation. And Mr. Schiff, he makes a good point. I mean, the bottom line is the reason why this jobs number is better is because the historic amount of stimulus, all the government spending, and believe it or not, someday that's going to have to come to an end. And I think the fear is that when it does, we are going to see that rampant inflation, and that is going to keep the gold market up. But before that happens, more than likely, we're going to see a massive correction. I remember back in March, I was talking to Peter Schiff about the gold price. He says, well, it's going to go straight up. It's like, well, he was right, but you had to go through a $300 correction, almost back down below $700 an ounce before it did. So I'm afraid that if the economic data continues to get better and the jobs number gets better, we are going to have to go through that adjustment, which means gold is going to get smashed, it's going to get hit hard, and then it'll start a more solid rally based on economic growth and the inflation that may come along with that.
All right. Well, you were talking to Peter, but we've got to give his brother Andrew a chance to chime in.
We had a $30 sell-off in gold after the Dubai thing last Friday after Thanksgiving, and it snapped back. I'm not saying it's going to snap back tomorrow, but I think, you know, a one-day sell-off after a 20% move inside of 6 weeks is certainly nothing to do backflips about.
Robert Gray, do you think it's a little strange that the market on a day where we did get such a great jobs report can't decide whether to be up or down? We've been both twice today.
Yeah, I think a lot of people are trying to reposition themselves now. The dollar strength caught a lot of them off guard. I mentioned that carry trade, and you can't emphasize that enough because everyone was borrowing in dollars. They're so cheap, but if they think that's going to change soon, and that would be, of course, with the Fed raising interest rates, the dollar rebounding, the economy showing some signs of strength, maybe inflation on the way, people are really rushing to the exits out of some crowded trades in those commodity stocks, in commodities in general. It doesn't mean, that we won't see some of these commodities bouncing back, but right now, a lot of people, they saw these things jump at the open, many of them to 52-week highs, Liz. A lot of the commodity-related stocks did. In the fertilizer business, in particular, your hot stocks like Mosaics and the like, they jumped up, and a lot of people used that opportunity to get out of them, and you saw them just collapse as a lot of people were moving out, even as they went to new highs today.
Andrew, talk about the popularity of gold, because sometimes when things end up on the cover of Fortune and even Time and Newsweek as the buy to get, that's the time to get out.
Well, yeah, you've certainly seen a lot of that. But the question is, you got to ask yourself, what percentage of retail investors out there really are adding gold to their portfolio? I would imagine it's not that great of a number. Certainly, with respect to other asset classes, isn't that great. When you go around the country, what do you see? You see cash for gold stores everywhere. I think there's a lot of people are selling their gold now. I don't know if there's, if there's that many more people buying than have in the past. Certainly, the big players are buying more. The investment funds and mutual funds.
And India and so forth.
And the central banks are buying more. But those people are buying, they're not buying for short-term trades. They're buying for real long-term strategic reasons.
Let's get back to India. When a government, an entire country buys gold, gold tends to be somewhat of a fear trade. Certainly that's what we've seen this time around. Do you see other countries doing that? So I'm just trying to get some visibility as to whether this rally continues, because it's driven by central banks.
I don't think it's the India move, for instance, is a fear move. I mean, India is looking for an alternative to a destabilizing global currency. They see the reserve currency is $1. They don't know where that's going to be in 5 years. Could it be the renminbi? Could it be the euro? They're not sure, but they do know they want to have a stable value for their cash. So they put it in gold. They're not going to be big. They're not going to be trading that. And I would imagine other countries would follow suit.
Andrew Schiff, great to see you, Andrew. Thanks for being here again. Appreciate it.